Okay, excuse me. Good morning, all. That's of course if you're in Australia, but good morning. Hope you're all doing well. So it's a morning playbook for the 11th of June. Hope we're all well today. Looking forward to a good day, even after the US a bit of a sell-off. But I'll explain my reasoning in just a minute and what I'm looking at. So today I just want to talk about obviously the major indices. You can see the SPY up there at the moment, and that's the Aussie 200 SPY 200 futures index. So the market did pop up yesterday, which was a bit unexpected, caught a lot of people off guard. The bullish move was just bang. It didn't really give too much of a hint that it was going to take off, but yeah, it did. And we traded back up to the highs, and we backed off again last night. So it was a bit of profit taking in the US last night, coming to FOMC. We'll have a chat about that. But I'll get rid of that, and I'll get on to going to look at the major indices. Obviously, a couple of currencies. I think the Aussie, there's also the yen, and potentially euro. We're at levels where if there's something's going to happen, the reverse, there's a lot of fuel to get squeezed back out of the action. Okay, so we'll take a look at those, and then I'm just going to go through, obviously, some copper. Copper rallied straight through the resistance zone, which we've been talking about. So it's now whether it's going to pull back, retest, and go again. But that's a good signal for higher prices on equities. And then just see if we've got time to touch on some Bitcoin and a couple of cryptos, say Ethereum. So firstly, g'day Jason. I hope it's not sunny up there, mate. Just stop rubbing it in. Yeah, what was I saying? So we've got overnight FOMC meeting, the Fed Reserve in the US come out, and everyone was looking forward to that. Just to see what happened. I think a lot were sort of expecting something more bullish from the Fed, considering the payrolls on Friday night. The employment data came out better than expected. It was expecting worse, and it came out better. So I think last night people were probably looking to just take some risk off the table of the last couple of sessions, which we saw in the US and in Europe as well. But the Fed has basically said they're going to backstop the markets to support the markets. I mean, they're not easing up on their bond buying. That's going to continue on. Support. Dollar's going to get weaker. If the dollar's weaker, that should be supportive of equities and commodities and things like that. So again, there still doesn't seem anywhere to put your funds. Major funds are going to be flowing into equities. You would expect, potentially, especially the US. I mean, if you're looking at corporate earnings being higher, remember that the US dollar is lower. So any of those multinationals earning from overseas, it's a better return for their balance sheets. So yeah, that's what I'm sort of looking at. So I want to go over the indices so you can see this is the ASX 200. We've been speaking about this for a while. Got a bit of a target here. I mean, it's just not a, wouldn't say random target, but the way we look at it is, that's the extension. We call it volatility leg up. So first sort of push up before we had a bit of a pause, a big sell off here, got contained, and you take from low to high, you just extend that same mirror, that leg up, takes you to 62.70. Now there's not much of a zone. There's sort of this zone where we reacted before. But yeah, I would expect that's not looking bearish. That expansion up, consolidated, pushed lower, wiped the back off into the close yesterday. So don't be surprised if we open down and rally again today. Expecting down 70 on the open. G'day, Gino. Expecting down 70 on the open of the ASX, but don't expect if it's not. Don't expect it to sell off. The US is down after hours at the moment, but they just could be flushing people out of the market still because they're more concerned. They don't care about the ASX. They're more concerned about what's going to happen in the US tonight. Now, if they're trying to flush people out, get a bit of a negative open, they can soak up some cheap stock and then rally it into the close tonight. That could be a plan of attack, what's happening there. So we'll see how it goes anyway, but that to me doesn't look bearish at all. I mean, we could get something like this again, consolidate around the MAs, then that last ditched effort potentially to 62.70 or higher. I'm not saying that's going to be where it's going to stop, just saying that's a target to I'm just wary of. All right, so if we go to the Dow, look at the S&P and the Dow. Now that's not bearish action to me. That's sideways. That's consolidation. I don't see that as bearish at all. So for people, the bears are willing to come out. They're waiting to come out, and everyone's expecting it. I do too. I don't think we should be up here, but I'm not going to argue with the market. It's a losing game if you're trying to argue with the market. The market at the moment is set to go up. If the US dollar keeps going south, then that should be there should be some support for equities. That and what do they call it? The Federal Reserve put trade, meaning, if anyone knows options, the puts protection for the downside. So it's the Fed put, they're calling it, in the way of stimulus, which could support this market. Now you can see that action on the statement, popped up, down, up, down. So look, there is some selling coming in, but it could just be consolidating to maybe just to squeeze out some of these buyers that have built up. They're getting a bit nervous, but you look at the momentum. Momentum's peaked up here, has come right off. It's come back to I don't mind the fact that it's come back to the zero line, because it's a good opportunity that can just lift again, like it has back here, off the MAs. It has previously back here. It's done it quite a few times, just about here anyway. There's no reason why it can't do that. It's consolidating. If there was weakness coming in, you would have expected that to really get sold off hard, because there's more than enough fuel to give this market a bit of a whip around and knock it on the head. But I think it's going to take a while to turn, if it's going to. So in the short term, I'm still looking for sort of higher prices and that. I'm still fairly bullish in the short term, but the longer term scenario could play out instantly, don't forget. So you're going to be on guard for that. You don't want to have wide risk parameters on any trade because you think it's going up. You've got to bear in mind the overall fundamentals of the market. They're ignored at the moment. There's going to come a time when they can't be ignored. All right, so we've got that, and the Dow's much of the same. That's not, to me, that sort of pullback, consolidation, another sell-off, and that was done on the open, I think. I've got a 30-minute chart, 11:30. So that's the open. So that was the close the night before. This candle just into the close, bit of sell-off, continued on the open when equity markets in Europe and that was selling off as well on the open. They didn't sell off, as in, I don't like to use the word sell-off. Sell-off implies a trend down. It doesn't. It's just a bit of a push down. Get that nervousness going, and then it's bounced later on. So that, to me, again, doesn't look bearish. Bearish is, you'll see something different when you're looking at bearishness. The market will go. Okay, this is probably not the greatest to say. Sideways here, you might get a whole, a period of sideways price action, which we're not. We're still going up. If that starts to consolidate up at the highs and we start to see some price action that's looking heavy, then you get that sell-off. But at the moment, the trend is up. Look at the NASDAQ again into all-time highs. So from price action wise and a macro perspective on the price action, it's not bearish at the moment. Like I said, fundamentally, yes, potentially. So look at the Aussie now. This is what I'm looking at with the Aussie. I mean, there's something just to take note of. Anyone that knows the way we're trading, and we just put out a video. Look at our YouTube channel on anchors. Sorry, what am I talking about? That's to come. I'm lying, aren't I? So that's to come. Hopefully on the weekend I can post that out on anchors. And when I talk about anchors to the trend up, anchors are your swing levels or your high lows. This trend up here, anchor, 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 and then it gets broken. When you break an anchor, you either consolidate those highs or you pull back or you fall. So there's something to take note of when the anchors are breaking and when you get double top. So there's a difference in something like this where people call it double top. If I can draw it, we've spoken about this before. That pullback there. So at your stage, that's the anchor, and people will say, retest here. Say you got this price action. They say, oh, it's a double top. I don't believe that's a double top until we break the anchor. Now it's a different scenario if that's your anchor, and then you come down and you work your way back up, and then you start to break down, okay? Because we've broken that anchor there, right? So that's different price action to this. This could be a pullback. It suckers in a few sellers, and then boom, up we go again. From here, that sort of scenario, I sort of expect that action just to squeeze them all out again, because it hasn't broken the trend. The trend is still up when it doesn't break the anchor. Now this breaks the anchor, which is what I think we've seen here on the Aussie. That rally up into the highs at 70. We'll talk about that for a while. Had a bit of a pullback. We alerted here for a buying opportunity, but it just didn't play out. I didn't like that kind of price action that spiked up. I expect a bit of a decent correction, and then the setup to play out, but it didn't. It just took off pretty much. So it did play out to what we expected. It just didn't give us an opportunity to jump in. We're talking about this price action. Broke the anchor. We've gone back and retested through these highs, spiked, rejected pretty quickly. So this is the price action I'm looking for now. I will need to see it, push down and a pop up to retest potentially that level there at around 69.85 thereabouts, or it can go through. It doesn't bother me, but if we can get a lower high coming into play, and then you can get a setup on the downside, that to me is saying there's a lot of potential longs built up in here ready to get squeezed out. because there would have been some with this move up still holding, even with that flush out, and then we've retested, they're feeling good. And as soon as you start coming down a second time, it's just confirming this level. So that for me more as a double top than anything else. Okay, that level with rejection there with a big flush. All right, so I'm looking at that. Look at the euro. Not so much the same action. That's still, you know, trend up, anchor here, correction, anchor. So it hasn't broken an anchor for me. The anchor's at this level, 112.20, 112.50. Say we could easily get a pullback, hold, and go again. It's just that it's in that zone. It's up towards that zone at 114.50 now. I think for that to roll over, you're going to look at some strength coming into the US dollar. But at the moment, it's all weakness into the US dollar. So I think this is just going to continue to drag up, drag in some more buyers, keep pushing up. It'd be interesting to see what happens up here, because it is, you can see that spike up that was rejected. You know, it's getting rejected as we're getting up there. You get this sort of spikes into the level, and then that rejected, but it's getting soaked up at a higher level again. You know, sort of grinding out a lot of these buyers, squeezing them out, and then rallying again. So just keep an eye on the euro. I like the Aussie better than euro. The pound, you know, that's more choppy. That was choppy price action overnight. It's looking like it's a bit of weakness now, but we'll just see how that goes. I haven't really looking at that. The yen. Now, why have I lost the yen? Don't know why I just decided to go for a walk. I should have it there. Okay, so that's the action that I'll be looking for. Yen is down in a zone. Okay, we've touched on here. This is way back in March. Again, pushed through, retested through roughly about that zone, pushed down. You know, you pop back up, retested and held that time. You know, held again, rallied up. We're straight back and down to that zone. So this could be an area where we could see some buying. I would be expecting sort of that flush down just to take a few. You're going to trigger a few sell stops, pull back, build a higher low, and then go. Because what that'll do, two things: you get dragging in some more sellers to squeeze them out and get the ball rolling, because they're the ones going to be first under pressure. And if you get that high low, they're going to be the first ones to dive out, and then that's going to trigger potentially all these sellers that are built up on that way down a bit of a squeeze. So I'll be looking for that squeeze as long as it is off a higher low, maybe something like this, or you know, that sort of price action capitulation through, pop back up, hold a higher level, and then go. Okay, so that's what I'm looking for on the yen. I mean, that could obviously keep pushing down to this low at 106.07, but I fancy this level here, so I'll just keep an eye on that one. Now we'll go over to copper. Copper we spoke about yesterday. We'll see if we can get onto gold as well. This level here at 2625 is what we spoke about as the highs, is where it was trading before the sell-off. Okay, so that's where it was previously. G'day, Mike. Sorry, mate, didn't see you there. You know, so that we got that before the sell-off. If I can go back, oh no, it doesn't matter. We'll get this done. That's where it was trading. That was about the level before we saw that capitulation. The market sold off in February, March, got hammered, and that's worked its way all the way back on increasing demand. So as long as that's going up, for me, I think demand, they're looking at demand increasing. That's something they're focusing on, which they're not focusing on the equity sell-off, because that you would expect would get hammered. So for now, it's whether or not, I didn't mind the fancy of that, see if we can sort of push back into that level, potentially, and start to react back up off it. And if we do that, that's a good sign. You know, good sign for copper and a good sign for potentially equity markets. Gold, touching gold. Gold's rage bound, like we were saying yesterday. The fact that it didn't roll over here and start to push back down to that 1660-65 zone, 1670 area, was a sign that we're going to be range bound for that longer term between, is it 1750, 1740. Just reacting at 1740 at the moment. It'll be interesting to see whether we, you know, we get a reaction off, get some lower highs, and we go range again. So we start to trend down from offer to bid. So offer zone to bid zone. We'll see if we continue to get stuck in that range, which you can see from back on April. All right. Otherwise, it could mean we could spike up into 1750, and that holds, and we start to go down, because that will trigger again a few buyers above this zone. I mean, there's always bulls into gold. There's always the bulls looking to the moon. Gold, this, that, and the other. Problem is, it's US dollar based, and if the US dollar bounces, that should get sold off, you would expect. But at the moment, if the US dollar continues lower, yeah, expect potentially gold to consolidate this level, even spike a bit higher. But everything's coming to that important zone. Gold, US dollar's down near support. The yen is down near support, which could bounce. So they're all sort of mirroring each other, if that makes sense. Gold, we've done that. Look, that's probably about it. Just quickly touch on Bitcoin. You can see Bitcoin longer term. Go to the 4-hourly chart. Is holding this trend down still. A longer term trend down from 20,000 or wherever it was. We've got a zone in here that's held again, big sell off, bounced all the way back up. We've got an inside level which got washed out and rejected fairly quickly recently, rejected. We're back up there now, so there could be the fact that we're breaking this trend up here, this consolidation here, we could see a sell off. Okay, so just be wary that you're not looking for a breakout there. We could easily pop and get smacked back down again. And same with Ethereum, very similar price action, and these big push down. So that's holding a longer term trend down, but it's actually holding this trend up at the moment. So it's coming to that point of agreement where potentially we could sell off, but we'll just keep an eye on that. I think all these buys that are built up here could easily get squeezed out with a big sell off. If they start to grind up, it's going to start to get stretched. All right, guys, that's probably about all I wanted to say today. We're back on tomorrow again. But like I said, if you like what you see, you like what you're hearing, and you agree with me, that's fantastic. Just realise I'm never wrong. But anyway, it'd be great if you can visit our website. Website details are on the TradingView site. Anyone else should know them. www.tradesetup.com.au. Go to the website. Feel free to subscribe to our YouTube channel and anything else we've got going, like Twitter and Facebook. Give us a like. That'd be fantastic. Otherwise, we'll speak to you again tomorrow, guys. Enjoy your day. Bye.